The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Before we get into the technicals, let's have a look at what traders are watching. Fed Chair Jerome Powell responding to allegations on cost overruns for a renovation project at the central bank's headquarters, saying the project was large in scope and involved a number of safety upgrades and hazardous material removals. Japan's core inflation slowed in June due to temporary cuts in utility bills, but stayed above the central bank's 2% target. A cockpit recording of dialogue between the two pilots of the Air India flight that crashed last month supports the view that the captain did cut the flow of fuel to the plane's engines. And the final season of Squid Game helped Netflix beat Wall Street earnings targets for the second quarter, and the streaming service raising its revenue guidance for the year. Let's get across all the technicals now and join Peter Pan from ACY Securities. Always great to see you, Peter. You're looking specifically at currencies. What are we seeing with the dollar-yen relationship?
So the Japanese yen fundamental are mainly driven by two main factors. First is the safe haven demand when US stock market falls. The other is the carry trade based on the rate gap between US and Japanese bond. But in July, dollar yen has jumped from 143 to 149, but the rate gap between US and Japanese bond did not widen that much, which means the dollar yen is rising too much compared to its fundamentals. Thus, the upside for dollar yen is limited. There is two short-term reasons for a weakening yen. First is the Japanese trade with the US is slowing. The exports to US has fallen 11% in June, which hurts the trade demand for yen. And secondly, there is a political risk. So Japan will hold an upper house election this Sunday. Markets fear that the ruling coalition may lose its majority, which will lead to tax cuts and cash support at the same time, which will also lead to a weakening yen. So, but these two risks, I think, are mostly priced in. The big gap between dollar yen and the rate spread shows selling yen is overdone. So if the ruling coalition keeps its majority on this Sunday, the yen could rebound very fast, which means dollar yen may have already reached to its highest level recently. So in conclusion, I am bearish on dollar yen at 149. Traders may short on rally with a stop above 150. Another way I also want to see is to wait for a breakdown below 147.6. If the risk of sentiment grows, dollar yen may keep falling to 46 or even 145.
All right, let's have a look at what's happening with the euro then. Easing somewhat and near about, $1.60 against the greenback.
So for euro dollar, I mostly stay bearish on the dollar because Trump has pressures on the federal. If like the Trump do like fire Paul, the Fed will lose its fiscal restraint rule. Interest rate was shifting from targeting inflation to serving fiscal needs, which will lead to excess dollar supply. And also weaker monetary credibility will trigger selling of both US bonds and the dollar. This will create an extreme depreciation risk for dollar. But for the chart, euro dollar is still in a downtrend and not even break through its trending line resistance. But the market reaction on Wednesday was very clear. So when Trump mentioned to fire Paul, the euro dollar rise sharply and break the trending line in very short term. before retrace back after he denied that plan. So this shows that if extreme scenario occurs, euro-dollar could easily break the downtrend. So technically, it is safer to wait for a confirmed breakout, and the key breakout level is 1.165, which is both the trend line resistance and the neckline of the base pattern. A break above it would be a signal for a shift from bearish to bullish, and the target and the next target for a long position is the Fibonacci retracement level at 1.17 and 1.173.
All right, what about the Nasdaq? This is incredible, Peter, continuing to hit these records. We know the story about NVIDIA, but what are the technicals showing you? Does this bull run continue?
Okay, so Nasdaq always see US equity has like two short-term support recently, but still facing significant risk. The positive, the first positive thing is that Trump is provide pressure on Fed, which raised the expectation for looser monetary policy, which support the stock market. The other thing is the AI-related optimistic is continue drives the sentiment. However, there is still extreme risk remains. While Trump's pressure on the Fed benefits equity, a loosening of confidence in the dollar could also trigger capital outflows from U.S. assets, which puts strong downside pressures on the stocks market. The other thing is the trade talk. Despite Trump's repeatedly claims of a big deal, negotiations are not going well. Many countries may delay the talks until U.S. midterm election, which makes the 1st August tariff deadline is a key risk. So the current rally is mainly driven by the so-called tackle trade Trump always chickens out. The market assumes that the global tariff will never be implemented, but I believe this optimistic is misplayed. So if the global tariff be proceed on the 1st August, it will give big pressure on the US stock market. So talking about the chart, I think a short-term long and a medium-term short strategy is recommended. So currently, the Nasdaq 100 has break out 23,000 yesterday and create a new high level, and I think it will remains bullish as long as it's hold this level. So, but the turning point could be 1st of August if the global tariff has implemented. U.S. stocks market or let's say the Nasdaq 100 will easily break through 23,000 and break below its trending line support and maybe retreat to like 22,000 Fibonacci retracement level, or even test the previous low at 21,500.
All right, we're going to have to leave it there, Peter. Always appreciate your insights. Thanks so much, Peter Pan from ACY Securities. That does it for this episode of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.